Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And tonight, it's Thursday night edition. Why? There will be no Financial Friday night live stream. So tonight, the traditional SSN Lifestyle Punta Cana Investors Forum with everybody had to be delayed for another time, unfortunately. It's raining out here, and it's been a little drizzling all day. And I don't like taking electronic equipment in the rain. Anyhow, welcome to the SSN Nation Thursday night special edition, where investment opportunities galore. Are you going to be ready for your financial freedom plan? It's now. What are you waiting for? We have a lot to talk about, so please come along for the ride. Stop struggling now. Lifestyle gear. Dry fit polo. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. I want to thank you so much for being here. Please share the videos because you never know who's out here looking for information, who's out here not even looking for information, but yet they'll find it. All right, let's get down to it, shall we? Once again, we've done a few little things here, not that much, but nonetheless, look who's in the house. Welcome, Trucker Trey, to the SSN Nation Thursday Night Live Special Edition, because I won't be on tomorrow night. What's up, E? Thank you so much. What's up with you as well? Very happy to see you. Did you investigate ASST? No, Phil Snuts, I did not. And welcome to the SSN Nation Thursday Night Special Live Edition. And Lisa Adele, welcome to the SSN Nation Thursday Night Live Edition as well. Taglines, I'm ready to learn. Thank you so much for that, ready to learn. I greatly appreciate that because, you know, a lot of people are not ready, willing, nor able. And luckily, you have internet connections and we're here tonight. But make sure everybody, you smash that like button because the YouTube gods, you never know if they're watching. The Twitch gods, the Instagram gods, you just never know who is watching on these streams. Now, furthermore, I am running this on live stream tonight. Yoel Nolasco, I see you on Instagram. Welcome to the Thursday night special edition. Thank you so much for being in the house. And no, I have not talked with Larimar. Just so you know, I haven't went down there. I haven't even been to the building. Basically, I don't even care about them guys anymore. My money has been lost as far as I'm concerned. The greatest thing going is when you ask for a refund a year ago and they're still acting like they don't know anything. But again, I have not done anything since the last 6-7 months because what's the point? They're not building. They're not doing anything. Clap it, Tone. Welcome to the SSN Nation Thursday night edition, special edition tonight. So we always got to talk about money, ladies and gentlemen. You know that. We have to. And don't play around right now because your financial freedom is in your hands. Plan now, just like we were talking about on Wednesday, just last night. This is going to be a short and sweet live stream because nobody expects it on Thursday night. But nonetheless, here we are, live stream edition. Make sure if you like what we're talking about, subscribe to the channel and click the all notification bell. Check this out, ladies and gentlemen, right here. This right here is what we've been talking about for over 2 years. It's been 2 years, 2.5 years is when Mr. Dividend and Mr. Worldwide was talking about yield max ETFs. And some of these yield max ETFs give out weekly dividends. So I want you to pay attention of just this right here could be greatly to your advantage for your financial freedom. Why do I say that? Well, there's several reasons, But the number one reason, the distributions. Look here. This right here is distribution rate. Okay, now you have to understand, since they do option income trading, a distribution rate is based on the option income for the week or the month. So it can be variable, right? It'll be a variable. Just keep that in mind. So even though you see something crazy like 33%, 61%, 28%, 87%, 65%, 71%, so on and so on, that could be your return, but that requires the stock price to stay relatively even, and they're giving out this amount every week, or we'll scroll down, or these every month. So if they gave out 15 or 31 cents for crash, CRSH, and it returns 75 cents. But the problem is it does not always do 31 cents. It could be 25 cents. It could be 37 cents. It's a variable. At this stock price today, just so you guys understand, right? The stock price today, the 15th of May, that is how it works. Okay. Now, this is why opportunity for these are very, very good. Now, let's look at some other things, because here's the stock symbols over here on the left-hand side. All right, right here. As you can see, on this side of the fence is where you want to play. All right, that's where you want to play at, ladies and gentlemen. So here, let me get the screen up for you so you have a better view. So that way everybody can check it out. See, look at the weekly, ULTY, YMAG, YMAX. Crashes every 4 weeks, but LFGY. Look at all of these, and can you believe these type of returns is possible where you could stay somewhat near there, even though it says you could get 65% or 61 or 75. What if you get 30? Would you not be happy with 30 or 25 or even 20, right? So it's all relative, but you should pay attention to your investments. Now, I want to show you something else, because here goes the monthlies, and look at the returns for these monthlies. A lot of people would be happy, more than happy. In fact, high risk, high rewards. Look at this: 101%, 51%, 105% for everybody on podcast. Can you guys believe this? 38%. And are you sleeping out here? Now, remember this: when the stock market is gyrating, going up and down and moving all over the place, this is great for yield max ETFs, because they deal with option income fees, premiums, and things like that. And so they don't buy the actual stocks. That's the difference. They're doing the stock option income, option trading. All right. They buy a few treasuries, but go study just Max ETF itself. There's others too, like IWMY is going to have their weekly payout, but that's not a Max ETF. That's a Defiance Group. They do similar type of things. They're also along that 25, 35, 40% return for some of their ETFs as well. So there's a myriad of choices that you have, and therefore go check it out. Go to Max ETFs. If you don't have a brokerage account, this is opportunity number one. You don't have a brokerage account, then simply use the links down below that's going to show up after the live stream. Hold on a second. Let me do something, because I'm going to put this in real easily. I got to do something in the background. But nonetheless, yeah, this will work. This will be even easier. In about 3-4 minutes, you'll be able to get a brokerage account with Robinhood or Webull or Moomoo. They'll give you free share of stock in the case of Robinhood. They'll give you free shares of stock in the case of Webull and Moomoo. But why not sign up for all of them, right? Why not? If you're going to get free shares of stock. Unfortunately, with Webull and Moomoo, you do have to deposit money. You have to deposit $100 or more in order to get your free shares of stock. And Moomoo actually makes you have to keep $100 or more as a stock prices, your portfolio in your brokerage account for 60 days. So that's the requirement in order to get your free shares of stock, your 5 free shares of stock, or whatever other promotion they might have for you right now. Webull will just give you fractional shares, maybe 20 fractional shares, maybe 10 free shares if you deposit $100 or more. pretty much. So that's pretty simple right there. So you guys don't have to worry about anything. It's nice and easy. You don't have to worry about it. That's number one. Let's see what else is going on. I just want to say a shout out again for everybody on the Twitch, the Instagrams, the YouTubes, the Facebooks. Thank you so much, everybody that's on the podcast, SSN Nation podcast. Thank you for listening. I greatly appreciate it. Now, let's get back to this, shall we? Because this is going to be a very, very interesting night. It's going to be short. It's going to be sweet. And we still have to talk about welcome to the SSN Nation Thursday night special edition. We're talking about investments, opportunities galore, financial freedom, plan now. And how do you plan? You join the big boys. They invest in gold and silver. You should have a little bit of gold and silver. They invest in real estate. You should have a little bit of real estate. All of this has to make sense for you, though, and your pocketbook. But nonetheless, you got to have a little bit of some of all of this. And you're going to have some sort of extra streams of revenue, some sort of business on the side. It's that simple. 80% of the population is living paycheck to paycheck during the month in America. So don't pretend out here that you're on a live stream and you're going, I'm good. No, you're not good. You know why you're not good? You'll never be good because you don't know how much it's going to cost to live next year or 3 years from now or 5 years from now. So you might be comfortable right now, but if you don't make provisions for you to be able to make money in the future price. So let me explain in case you're new here. Today's price is not going to be tomorrow's price. So everything that you're paying for right now, you know for a fact that it's 3 years, 2 to 3 years, or 1 year from now, it's going to cost you more. So the reason why you want to have a business is because you get to make money in the inflated value, or shall I say devalued currency. But anyhow, it's inflated value that you have to pay for goods and services. So if I have to pay for something today for $100 and in 2 years it's going to cost me $120, which is going to be the case, then I want to be paid in $120. I don't want to use my old money to pay for the higher price. So if I do not invest, I can't make that 20%. Do you understand? That's why you don't keep your dollars in a safe. We talk about here, you need a duffel bag of cash. That's for sure in case of emergencies. Your ATM cards gets jacked, your bank suddenly closes down, ATM machines don't work. All of a sudden you have a problem. So you always need a duffel bag of cash. But for everything else, you're going to have to deploy it to where you're making more money somewhere else, even if it is treasuries at 4.5%. Okay, fine. That's better than zero and losing 4.5% buying power every year. You understand, I hope. This is how you get to financial freedom, and making money in the future is the only way your future is going to be secured. There's nobody, you know how many people are 65, 75, 80 years old that are out here having to go get a job, a part-time job, because their money in retirement ran out. It didn't run out. What happened is the cost of living when they retired, when they were 62 years old, 17 years, 15 years, 10 years later, the costs were double or triple or quadruple the cost. So there's no way you can plan for this. That's what basically has happened. So if you retired in 2000 at 62 years old, you're now 82 years old. Do you know what you could buy a house for in 2000? Talk about $100,000, 120 grand. You can't do that now. That house costs 500,000, 600,000 or more. So the cost of living has increased. Do you know what rent was in 2000? You could rent a house for $800 that had 3 bedrooms, 2 baths, and 2,000 square feet. Now you have to pay almost 3,000, 3,500, 4,000 in a lot of areas. You can't plan for this. Gas at the time was $1.10, 95 cents. Now it's $2.95. There's no way you can plan for this. Your money is the old money. You sat there and said, well, I saved $500,000. Oh man, last me forever. I only have to spend $10,000, $20,000 a year until your taxes all of a sudden cost $4,000 a year, until your insurance all of a sudden costs $5,000 a year. Your HOA all of a sudden, instead of $50, $75 a month, is now $300 a month and $4,000 a year. All of a sudden, that 25,000 that you said, "Oh, I'm safe and sound every year, I can just drip and withdraw a little bit." No. Now all of a sudden you need more money. Now you understand where we're coming from, I hope, ladies and gentlemen. In case you're new here, this is what we talk about. We make sure you win. We want you to win. That's the key here. We want everybody to win. All right, EV Place, welcome to the SSN Nation Thursday night edition. And he brings his tagline, "Good evening, money makers." That's right. I showed the screen. Tomorrow, a lot of people are going to be doing the salsa dance on Friday night. And meaning to mention this again, I will not be doing a Friday night live stream because I will be on a flight. I will be on a plane. Now, I'm pretty sure I'm going to be in Philly for a minute. I'm pretty sure that I won't be. It won't be 9 p.m. at night. That's for sure. That's when we do our live stream, 9:10 p.m. Eastern time. So I won't land until after 9:10 p.m. Way after. So live stream for Friday night will not happen, unfortunately. But hopefully, I'll see you guys on Monday night. All right. Now, good evening, money makers. Yes, salsa dance tomorrow. So a lot of us will be getting notifications on our phones from all of the weekly payouts and some of those monthly payouts. And for all of you who likes Real Estate Investment Trust, PSEC, they have a payout coming up in about 4 or 5 days. But then again, you would have had to been an investor a month ago. If you want 17% annually, PSEC, just so you guys understand where we're coming from here. But that's number one. Stock markets, number one, ladies and gentlemen. Number two, we're over here. Real Estate Investors Forum, Punta Cana Investors Forum, real estate. Today, went out and saw Joe Nay. That's right, in person. I've seen him and met him before last Investors Forum, but this time we went out and saw Joe Nay. And went to a place called Jardines 3 that's in a area that is way away from downtown Punta Cana, in my opinion. All right, way away. And it's an area where a lot of people live, but with a lot of people, it's more like, I don't want to say, it's not like totally run down like a ghetto or anything like that. It's not that. What it's like is, it seems like it's an older area and they're revitalizing it slowly but surely, but a lot of people live there and they only have one road, 2-lane roads. So they had a lot of traffic today. But nonetheless, the Jardines 3, I will have to admit, it was impressive. The only thing is I cannot get rent from an investment standpoint. So therefore, once again, financial freedom is going to be based on where can you receive passive income or semi-passive income. Real estate allows you to do that over the years. Now they have ADU units that people are allowed to build in certain states in their backyard to add what we used to call a mother-in-law quarters, right? That's being a way for people to monetize it, which again, I'm don't know how that's going to shake out over the next 5 to 10 years. I've never really thought about it, only because I've always viewed an extra unit in the back as a mother-in-law's quarters. When family comes or friends come and you say, "Hey, I got an extra 1-bedroom bungalow out back," that's kind of cool, right? But when now people are trying to use that to monetize, which I'm assuming it's very effective. It's just that I myself, it's a privacy issue for me. I don't want somebody living back there that's not like family members, right? I don't want people coming and going, whoever knows who they hang out with and all this, that, and the other. I'd rather have my family members back there not knowing who they hang out with and going and coming. But nonetheless, that is the point we're trying to make, is point number two. You're going to need some sort of real estate game. The reason why you're going to need the real estate game is very simple. Just like I started off talking when I said, how much were homes back in 2020 that you could buy a home for? The average price in 2025 for a home is 440, 430, 445, depending on who you talk to, whether they use median price or average price. but that's 400 and something. You need to make over $100,000 a year if you want to get a mortgage for that house. You know how many people make over $100,000 per year? It's a small pool of people. It's not like half of the population makes $100,000 a year. All right. So therefore, a regular old home is out of reach of a lot of people. So you need to think about getting something that you can earn passive income from. It's very simple. All right. That's the thing you need to figure out. How are you going to do it? Are you going to rent out a room in your house? Are you going to rent out the garage like people used to do back in the day? Think about this. Starting in around the 80s, the late 80s, 90s, remember the trend where people would close off their garage and they'd rent it out so they could make extra revenue? Think about this. This whole time, people have always had to figure out, ordinary citizens, OCs had to figure out how they're going to make extra streams of revenue. It just keeps escalating. It went from a garage to now a simple garage. Making that into a room and getting a few $100 isn't good enough. We got to go to ADUs now, which is crazy when you think about it. But that only puts you in how serious this is if you don't plan for your financial future. Or if you say, okay, Eric, I don't have to plan for my financial future because you already have parcels of real estate. You already have some way to bring revenue in from real estate. So therefore, your burn rate is going to be totally different if you know you always have money coming in. So now it's just a matter of how much more money do you want to come in and what your lifestyle is. That's the key right there. Here we go. EV Place. He says, Jerome Powell just admitted that his strategy since 2020 to keep inflation under control sucks. Yeah. That's interesting that he said that. But I'm going to tell you, in my opinion, he can say that. But what they did is it's astounding. They actually subverted a meltdown. He had a no-win scenario. Due to $7 trillion, $8 trillion added to the deficit between 2017 and 2021. That created so much money in this pipeline that everything was going to go up in price. You increase the money supply. Now there's money everywhere. That means the value of the currency was devalued. So you added 24% to the deficit, the USA deficit, 23, 24%. So if you add that amount, then prices have to go up accordingly. They have to go up 23%, but it's going to be exponential. So what do I mean by that is the part that I use for my computer, like RAM, hard drive, that's 20% more. Okay, now my screen, that's 15 to 20% more. So every piece of the supply chain to get products out increases. So during 2020 to 2024, there should have been a total meltdown. But because he did that transitory inflation BS, and because he didn't raise the interest rates like he should have in 2018, 2019, and 2020, he just let it ride. When he should have done it then, he did it after. Now you have increased prices and you're cutting off credit at the same time. Oh my. Now people, when they borrow, have to borrow and pay more, which means now their disposable income shrinks. Because now I have to pay more for the same things that people used to buy just 5 years ago. So now my money shrinks, but they knew the thing. He can say this now, but I got to give him credit because it should have crashed and burned. That's what should have happened, because there should have been no way coming back from 23%, 24% added to the deficit in a 4-year span. That should have been done with no way to repay it. And so when they did what they did, it's been remarkable that the United States economy did not crash and burn. But here's the fallout from it, though. Notice how long these high interest rates have been in check. I call high anything over 3.5. It's been 3 years, 4 years coming up if this rolls into 2026, and it is, because they're only going to do 2 rate cuts this year. So it's still going to be high. And because we now have tariffs and other things like that. Now, what's going to happen is we're going to have another situation that's going to occur. This is why he can't reduce the federal funds rate, or the board of regents and all them guys, right? They said, no, we can't do that, because if they actually reduce the interest rate and pour gas on a tariff, pour gas on a stock market, pour gas and a credit crunch to boot, oh man, it'll be an implosion. This is why they've been holding off, because they cannot allow the unknown factors of what's going to happen just because somebody wrote something on a pen and it was not planned. So when I wake up tomorrow and I tell you, hey, we're going to charge China 145% tariffs. Well, okay. Well, from the Federal Reserve standpoint, we can't plan the future because we don't know what's going to happen when those 145 tariffs come. We can guess. We got a great idea, but we're going to have to wait to see if the supply chain all of a sudden gets snapped. We can't reduce interest rates if that happens, because things are going to be in disarray. If you reduce interest rates at that point, you're going to either have another run up for more inflation, or you're going to have credit lock, because not everybody can get credit and there's not available credit. So you're going to have a credit crash. So that's why the 2008 Great Recession happened, by the way, just so everybody understands. All right, Jaway J, another investors in the house, along with EV Place, along with Jaway J. Welcome to the SSN Nation Thursday night special edition. And Jaway J brings his tagline, hello, SSN Nation. Received notification, and he smashed that like button. I like to hear you received a notification. That's great. That is awesome. That is good to hear, ladies and gentlemen. All right, let's see. It's better than he's saying it's all good. Hey, you know what though? Exactly. But it's very interesting, because he should have been saying this type of stuff before. He was never honest when he says, oh, it's just transitory, it'll go whatever, whatever. And I'm like, what do you mean transitory? It's already done. It's a wrap. You increase the money supply, it's a wrap. You do tax cuts and tax breaks so the wealthy don't have to pay their fair share of taxes, and they can use that money to go buy anything, to put more money out there in the system. I'm like, what do you think's going to happen? So I'm like sitting there, like you guys know, in 2021, 2020, 2021, I'm like, how come they're not raising the interest rates? This is not going to end well. And sure enough, obviously, we knew rates, cost of living was going to rise. But by them doing what they did, the cost of living, in my opinion, went up way too high, because they didn't act sooner. They should have acted a year sooner than what they did. Then we wouldn't even be here right now at all. But here we are, and we're on the brink of collapse, ladies and gentlemen, just so you guys know. That's why I give you one year, 7 months to get your credit in order, 1 year, 7 months to get your financial freedom in order, and get your freedom papers, because you're going to need them. Because after the next time, Jerome Powell and all these guys, at the end of this year and starting in 2026, when they start reducing the interest rates, there's going to be a buying spree, and there's going to be a credit spree. And just because everything costs more. So now, if you're buying something and it's 500 grand, 400 grand, 600 grand, do you know how many trillions of dollars are going to be out there that is based on a derivative alone? That is going to be astounding, because the number is way too high. So you guys don't understand. There's a repercussion from everything that happens, but at least he got on board, and I'm glad to see that he did not reduce interest rates yet. That would be awesome. All right, Eric finally received the title, now working Banesco. We'll provide updates as things progress. Jaway J, congratulations, man. Are we talking about over there by Vistacana, Primavera? Is that the place you're talking about? Let me know. Congratulations, man. Happy for you and the wife. And unfortunately, I wasn't able to see you and the wife while I'm here, because we're leaving 9:30, 10 a.m. in the morning, man. I'm hanging out here in Los Corrales. So let me know where you're at, Jaway J. If you're in the neighborhood, let me know. You and the wife. Brian P., Mr. Dividend's going to be doing the salsa dance tomorrow. Welcome to the SSN Nation Thursday night special live edition. He brings his tagline, Happy Day, Eric. I hope all is well with you. Yes, it is, man. Happy day, SSN family. Smash that like button. That's right. Give it a one piece. I greatly appreciate that. And also, here we go. We got to show some love. We are making money in here. That's it. Las Palmas Recipal. Right on, man. Right on. And you got it at the right price. So you're not going to be stuck like a lot of people who's going to be stuck over the next 3-4 years. Because once again, if I'm not mistaken, you were in the 100,000s when you bought over there. And you should or may be able to get your 99, 100, 120, 130, $140 per night because you have that villa. What's going to happen, though, over the next few years is American citizens will not be coming here to invest and around the world. Let's just keep it real. Americans, Canadians were the driving force for the investment phenomena over the last 5 years here in the DR. Now that that rush has come, people have bought their properties. They're sitting here waiting on delivery. There's not a whole lot of new customers. There's tourists coming, but those tourists do not have in mind, oh, there's cheap property over here because the property is no longer cheap. There's a difference. I could buy a $50,000 condo. I could buy a $134,000, $140,000 villa that's 3-bedroom, 2.5 bath, or 3-bedroom, 2 bath 4 years ago. You can't do that now. You might be at 300 for that villa right now and 275, and you might be for the condo at, well, you're going to be at 99, 120 for that 1 bedroom now. Unless it's in a jacked up area, it might be less, but that does you no good from an investment standpoint. So anyhow, that's what's coming down the pike with real estate. So if you haven't purchased real estate yet, don't worry just yet. There's going to be cracks over the next year with real estate. So don't panic. If you want to buy a liability such as a home, you'll have your opportunity. All right. I'm just saying, don't panic right now. But a whole bunch of people around a few states are panicking because they can't sell their homes. And insurance is off the charts for homes. So people don't even want to take and buy a home. And then they tell them, oh, yeah, that's going to be $500 a month just for your insurance. That's crazy. Then they tell them, well, wait a minute, your property taxes have went up because your houses have went up. And when you bought the house for that $500,000, now the property tax is 1.1%. So yeah, $5,000 a year, $500 a month for that too. Next thing you know, you have a mortgage, and that mortgage says, well, it's $2,700. All of a sudden, you're paying $3,700 just to breathe and live in a house without grocery, without energy bills, without electricity, without anything. You're already at $3,700, and the lights aren't even on. What about your car payments? A lot of people have these crazy car payments right now, $1,000 a month, $700 a month, crazy stuff. So $5,000, $6,000, and you haven't even done anything yet. You're not even investing. And that's why 80% of the population is living paycheck to paycheck during the month, ladies and gentlemen, and not you. We don't want you guys doing that. All right. We want you guys to win. So you got to think about your financial freedom. So we went to number 2. It's real estate. That's number 2, ladies and gentlemen. You cannot hide. Discount lots. If you want to buy, look, let me give you guys some information. I've talked about this before. If you say, hey, I need some vacant land, then go to discountlots.com. You can actually get yourself no credit check, no qualifying, no barriers to entry. That's what we deal with here. You can buy the property there, make payments monthly, control the property. And if you can come up with some ingenious plan on how to monetize that property, you win. All right. But again, you have to do your homework. Don't be amateur hour out here. You got to make sure if you're going to need water, sewer, and electricity, you better make sure that the lot or the acreage has water, sewer, and electricity somewhere on where you have access on your parcel. Because if you do not, let me give you guys a big open eye awakening. When people go out here and buy these lots and acres and they go, oh, yeah, it's cheap. Yeah, it's cheap for a reason, because if you call up the electric company and you tell them hey man, how much does it cost to get electricity from X? And they go, well, how far is X from your place? And if you say something like, oh, it's a half a mile away, you know what they're going to say? They're going to say, oh, how about 100,000? Because you'll be the only one bringing it down, so you have to pay for it. Are you going to pay for it? That's just the electrical. Now, when you call them up and say, hey, can you bring down a sewer down to me? And I need water coming down here. They say, yeah, we can do all that. It's going to cost you $175,000, $200,000. You have to understand what you're doing. So that's why you make sure, no matter whatever, your lot has water, sewer, electricity coming to it, or it better be right next door. Is all I can tell you, because the cost, even just 100 yards, is crazy. All right. So that's why the value is making sure you have those services. All right. Let's go. Las Palmas, receipt, Paul. Hey, Jaway J, let me know if you're over in the Los Corrales area. And also let me know if you want to share with people how much you paid for your villa over there. And that was, wow, 3 year, 2022? I think it was maybe even 20. When was it? 2021, 2022, something like that. It took all this time for him to get title. Again, once you understand what's going on over here, ladies and gentlemen, you'll understand why it took title. The people probably own the land, the developer. He made a deal where he probably had a contract, just like I was just talking about with the acreage. He had a contract to buy the acreage. And then that means the acreage is still titled to the previous person. So they have to do a transfer twice. And then he has to subdivide the lot, get a title for the subdivide, which is why he just now said, I just finally got my title. Because first, it takes, from one title exchange, it could take 6 to 9 months. And that's if it's clear. So if it's clear, 6 to 9 months title transfer. So in his case, the developer got the transfer from the landowner. That took, like, let's just say 6 months. Then the landowner had to go down and subdivide the lots and get an APN number. That could have been 9 months, 6 to 9 months again, but we'll go 9 months this time. So you're at a year and a half. Then I still have to transfer it to Jaway J after I get it subdivided. And that could take another 6 to 9 months. So we're talking about 2.5 years it could have taken. And it might have been 2.5 years for him, because I know it was like 2023 for sure. It could have been 2022 when he first started his adventure with that project. But again, let me know, Jaway J, if you want to share with the people how much you paid for yours back when. Let us know the year and how much it was, man, because you damn sure can't get that now. And that is the problem. And that is I'm going to piggyback on why I want you guys to always have some real estate, especially offshore too, because you never know what's going to happen inside of a country, whether it's this country in the DR or the United States, which there's a whole bunch of stuff going on around the world. So you want to put yourself in a great environment, whether if something happens, you go, okay, man, I might have taken an L here, but at least I have something else there. You know, that's the kind of a thing you want to do right now. But the thing is, I'm going to piggyback is the real estate. Remember when I was saying today's price is not going to be tomorrow's price? With real estate, that is the beautiful thing. So let's just say he bought his villa for $135,000, right? It's worth maybe probably 200, let's say. That's not what we care about. What we care about is what can we charge for short-term rentals or long-term rental rates. 3 years ago, we could have charged, I don't know, maybe $700 a month, $600 a month, right? But now 3 years later, we would get to be able to go today's price. Be able to charge $900 a month, I'm guessing, in that area, probably 1,000 maybe. So you always can stay in the money, stay making profit. And then it turns out 2 to 3 years from now, you add on another $200 per month, another $2,000 per year. All of a sudden, it's not too bad making $15,000 a year, right? So that's how it works. And that's why, but you'll be getting paid in tomorrow's money, the inflated money price. So you don't have to worry. So great job, John Wayne Jay, and everybody else who's out here making it happen doing the real estate game. All right, because we got to be in it. Now, the other thing that we should talk about also is the crypto. Um, we've been talking about this over the years that 2 years, 2.5 years ago, we started talking about buying Bitcoin and Ethereum only. No reason to go with altcoins unless you want to do high risk, high rewards. That's fine. But those two have proved themselves to gain almost like 20, 25% on average every year. Sooner or later, that 25%, like now, has showed up 75 grand to 100 grand. Now what? 100 grand to 130 grand? That's what we're talking about. That's where this seems to be going. I don't have a rhyme or reason for it because it's backed by nothing other than people just buying it. And it's backed by MicroStrategy buying it, backed by Elon Musk buying it. ETFs have come out buying it. So therefore, there's demand. And whenever there's demand, price goes up. That's why the price is going up. It's artificial because people just keep buying it. And now corporations, ETFs, and everybody else is buying them by the millions. So that means price goes up. It's very simple. So you need a little bit of that. So this is number 3. You need a little bit of crypto. You need a little bit of gold and silver and platinum, palladium, whichever your fancy is, right? All of that goes into their own bucket because they give you nothing back unless you sell it. The value in the future is going to rise naturally. But the problem is it gives you nothing for money spent. So take your pick if you want to jump into basket number 3. But that's how you make sure that you always have a rainy day. You have a little bit of that extra stash. The rainy day comes, you say, oh, yeah, okay, I can take some of this and pay that in today's money because that moves forward as well. The gold price is over 3,500. Silver price around 34, which is a travesty. It should be way higher, both of them. But the point I'm trying to make is at least they move with the cost of inflation. So even though you may not gain anything, you don't lose anything. You can always go sell it readily and then turn around and get back that value in the future. So that is something to be a good thing to invest in. So that's your number 3 bucket, ladies and gentlemen. Let me know what you guys are thinking. What do you think about these buckets? You guys have your own buckets that you want to talk about. Let me know because you want that financial freedom. You have 1 year, 7 months, and that's it. Yoel Nolasco, if you're still listening, please let me know after you sent that letter to you know who, what did you get back? Did they even respond? Because generally, I'll tell you in my experience what's happened. When I sent an email and I said, hey, I want a refund, I had to send it to 4 or 5 people. I CC'd 4 or 5 people. Then after a week or 2 went by, I sent another message and I said, hey guys, can I get my refund, whatever. And then after another week or 2, I sent another one going, all right, man, this is crazy. What are you guys doing? You're going to do whatever. Then a guy sends me a message because I said, are you guys even receiving my message? And some guy sent a message going, oh, we're receiving your message. That's what his message was basically. And I'm sitting there looking at this sentence like, well, okay, so he didn't even answer the refund part. And then I never heard from them ever since after that. So they never even addressed it, never wanted to address it. So it is what it is. So that's my experience last year. So Yoel Nolasco, let me know what your experience has been in 2025, if there's any difference. All right. Now, let's see if anybody else has any more buckets themselves. I want to hear about some other buckets out here. Come on, guys. Come on. And speaking of something now, I'm just going to go back to this in case we had some people that joined us late. Here's Geomax ETFs payout every month, but here's what's coming out tomorrow. Just so everybody can see, here's what's coming tomorrow. Weekly payouts tomorrow, every Friday. This is what's happening. All these are weekly. You can see 38 cents for CHPI, 27 cents for GPTY, 47 cents for LFGY, 23% for the other. You just keep going down the list. 24% for one, 10 cents, 19. Okay, keep going on and on. Now, here we got crashed, shorting Tesla, which is very interesting, giving great returns as well, because there's a lot of people that short Tesla. Let's get real. Their numbers are horrendous, meaning their vehicle sales, they're horrendous. They then went to dwindle and they have a problem on every continent. So people would bet that the stock would crash, but the stock's not crashing. So people are paying these premiums, and Max ETF is taking advantage of it. So that's how it's 31%, and that's how the distribution is 75%, which is pretty crazy. Your return possibly 75% is that's insane. That's high risk, high rewards. But look at the other ones coming out tomorrow. OARK, the Google option income, the Tesla option income, which by the way, 76 cents. Ladies and gentlemen, that is 76 cents. The stock is, I think isn't it like $8 or something? $9? I think it's $8 or $9. You know what's funny? People would take the 76 cents for 1 month and buy at $9. And you know what that would be? Just that 1 month alone. And now think you have another 12. Well, you got a continuous as long as Max ETFs is in business. But look at this. I'm going to put this, I don't know if you guys can see this, but I'll do the dollar 0.76, which is 76 cents divided by $9. Look at this. Look at that, 8.4%. Can you believe that? Most people would be happy for 8.4% annually. But can you believe this is just in 1 month? So what happens if they give another 76 cents? That would be 16.8 at the same price at $9. That'd be 16, no, almost 17% in 2 months. Most people would be very, very ecstatic. So again, this is why you have a chance to get your financial future started and rolling fast. I'll just say one other thing about stocks. This did not exist up until 2-3 years ago. So back in the day, people would basically have to live with the 8% or 7% or 6% or 4% dividends because you didn't have any type of this option income money coming in from an ETF. So the way you could get your financial freedom took 30 years. Because I'll give you an example. If you got 6%, you're happy. Your 401k got 8%, you're happy. But that's 2 years, 8%, 6%, 3 years, another 8%. The average, 10%. That's 4 years. Could you imagine waiting 4 years just to get 30%? See, this is what people forget. That's how it used to go. So ordinary citizens would have to work for 40 years, 35 years in order to accumulate because it would take you 7, 8 years just to double the money. 9 years to double the money. You can see easily right here, all of a sudden the game has changed. You can double your investment in less than 1 year if you're lucky enough to get into the right time, right place, right, that's where we're at right now with the markets doing this and they're rising. That's what you need. Markets doing this, going up and down and rising. That's what you need. All right. So that helps option income ETFs greatly. When the market levels, that's where there's a problem. All right. We can't have it level. That's when you have to start thinking about what am I going to drop this stuff into? All this profit that I've been taking, what should I do with it? And if you want your financial freedom, what you should start doing is we're going to do the post-retirement travel situation. We have to talk about it. You're going to start saying, well, instead of giving me all of the reinvesting all of the dividends, maybe I'll take 10 or 20% of that and put it into a more stable 5%, 7%, 10%. And I recommend JEPQ because that's 13.7% right now. That's right. That's a JP Morgan ETF. And hovers around 46, 47 to about 53, 54. But they're giving out $7.17 in dividends this year. 13.7% at a $52.50 price point. And if it's below $52.50, then your dividend yield is going to be above 14%. If you got a $52 or $51 purchase price, then you're going to be over 14%. Who wouldn't take 14% from a JP Morgan ETF? That's a little more stable, right? So this is what we're talking about. Anybody else got any buckets? Let's go. I want to hear. We went over 3 buckets right now. All right. Oh, hold on a second. Let me see what's going on, man. Hold on. I got to go back up. All right. Here go. We making money. Here we go. Here we go, ladies and gentlemen. Jaway J coming through. He's saying he bought for 155. I couldn't remember what it was. Oh, but what year though? Let people know. It was 155K, 3-bedroom and 3 baths, a 1-for-1. You know, that's my favorite configuration. And I hate 3 2s. I just love it when it's 3 3s or a case of a 3.35 as a 3.5 bath, because I never like 3 2s. It's just annoying. And when everybody, the other 2 bedrooms have to share a bathroom, it's annoying. But anyhow, 155K. So that is it. But what year was that? Was that 2022? I think it was, quite frankly. The timelines that I was talking about in order to get the title transferred and build it, I would think it's 2022, because here we are in 2023. It would have taken them a year and a half to get the title, at least. Best case scenario, it would have taken them a year to build it. So yeah, it probably was in 2022. My guess. We'll find out. Let's see what he says. Let's keep rolling. What's this? I wonder. Huh. Okay, hold on a second. Swimming pool was included with air conditioning in the living room and all bedrooms. He had the white line. And the $10,000 that they're charging, or $15,000 what they're charging people for a swimming pool now. Just 3 years later, they're charging $15,000 to add a swimming pool. Back in the day, it was included, or they charged people 10 G's. So he has that going for him. No AC units to worry about, which is $2,500 each. So he saved that. He's got the swimming pool. Didn't cost him the $10,000. Now valued at $20,000. So his value of his property, it clearly has improved. I don't know how much. I would guess around 250, maybe 225 to 250. I'm thinking somewhere in that neighborhood. But great job there. Special. Appraiser from the bank charges $175 to get the appraisal done. That is true, just like in America. That's standard issue. That's true. I'm glad to hear it's $175, because that's what it is in USA, or it used to be in USA. It used to be that in 10, 15 years ago. It was like $150 and it was cool. Now all of a sudden I hear people telling me, oh, the appraiser, they're $400. I'm like, what? Oh, are you kidding me? You know, you can figure out the appraisal price. All you have to do is go look around and go within a half mile. Well, no, sorry, they don't do that anymore. Go within a tenth to a quarter mile away, see what's been sold in the area for the same square footage and the same thing, like a 3-bedroom, 3-bath, and a quarter mile away or less. And you'll know what it is. If you bought something for $155 and then in the neighborhood, the new stuff is selling for $275 and it's next door or up the street or a tenth of a mile away, and we have the same similar layout and the same square footage, then we're using those. Those are the comps. So therefore, the appraiser comes out, does the comps, and says that's it. He's saying the appraiser said $175 to charge for the appraisal. So has the appraisal come out? Because I want to know, what do you think they're worth? What do you think it's worth? Yes, my average is 49.65. And since your average is 49.65, I'm going to tell you exactly what the winners are getting. I'm one of the winners too, because mine is 49 something. And I did the calculation when I was talking with one of the young guns here, Tamara's kids here for the Punta Cana Investors Forum. And I was telling him, he goes, well, I have treasury bills, 4.45, I think it is, at 4.4% annually. I go, well, why don't you just get JEPQ? Because right now, today, you're at 13.7 at $52.42. I said, I bought it $49 and something. When we do the math, it comes out to 14.6%. That everybody who has a dollar cost average at $49 and some change, you're going to be at least at 14.6, 14.7. If you reinvest, you're going to increase that a little bit. So you'll be at 15%. That's why you buy the dip when there was a run 3 to 4 weeks ago and it went down to $47. You should have been on that buying spree then. That's the only way you can get under $50. And that's where you want it to go. I didn't know they were going to increase the dividend to $7.17. Last year it was $6.25. That's almost a whole nother dollar. So it went from 11.5 or 11% to 13.7%. And everybody else who bought in at the 47, 40, and man, if you could have got their dollar cost average back down to 47.55, I can only imagine you'd be over 15.5. That would be crazy for a JP Morgan fund that's pretty stable. Woo, that's a hell of a bucket right there. You can't lose. That one you can keep for forever. 14% on your money forever? That'd be sweet. That would be sweet. You're going to need it. You're going to need it. All right, Yahweh J. Let's see. He says, no, appraiser was just scheduled today to go out there. She said report will be available in 45 days. All right, keep us posted, man. Who wants to put in their guess on Yahweh J's Larissa Paul is on the way to Primavera 3, 4 luxury. It's on that same road. It's over there with Urbe Kana. On that same road, it's a development. I'm going to guess 260. All right. All right. I want people to put it in the comment sections. Yahweh J. Villa. It's a villa. Phase 2 is now. Oh, he says, okay, I see. Okay, well then I guess I'll still put in 260K. I'm still going to put in 260K because I just went with it. I see now what he put in there. So obviously it's going to be more than that. Phase 2 is now selling for 265K and they probably don't include the pool. Oh, I forgot he has a pool. Yeah, so I'm sorry. I'm going to have to revise mine. Sorry, he has a pool. I forgot about that. So even though I know they're doing that, I was already in the range. So I'm adding 10%. I'm adding 10 grand. So we're going to be at 270. So we're going to be at 270 for me. So there you go, ladies and gentlemen. He's almost doubled his money. And now that I know phase 2 is selling at 265K, then I know they're going to come back close to 300. It should be 295, 280 to 300. I'd be willing to bet you. Because remember, it goes by material cost as well sometimes, especially here. You can't rebuild his house for the same price because in 2022, the blocks were 50% less. The new blocks cost more, and that's why they have to charge 265 for the same house in order to make the same profit. You see, that's why you buy real estate, ladies and gentlemen, and you rent it out. That's the idea, not to live in. That's a liability. I'm just saying. It's not a liability if you're renting something out and using that money to pay for a liability. You're using your streams of revenue to pay for a liability. That's where you want to go. All right. All right. Hey, Eric, you missed my bucket. Okay. Let me go back. Let me see. What bucket? I missed something. Hold up. I skipped. Yeah, I started messing around with this arrow thing that I've never seen before. And it took it to the bottom of the page. And that messed me up. Brian P. Here we go. Oh, something we were talking about before. I'm working on another bucket, music royalties. I love it. I love it, Brian P. Mr. Dividend, going to be getting some of that music dividend. Oh, man. Yeah, we talked about this last year. Music royalties that you can buy from artists that's sitting there dormant that you can spend $400, $500, $600 on because basically it was a hit song like, 15 years ago. So they get a little bit of royalties, maybe it's a $3,000 or $4,000 a year. So they're willing to sell it for like a few $100 and give you like a 10 or 15 year or give it to you totally. And what's been happening is a lot of movies and a lot of TV shows are looking for music that's kind of obscure. So then all of a sudden it starts getting played again. And those who are holding the royalties are getting a nice little check coming by default. So there you go. Just something to think about. I'm proud of you on this as well. We've talked about this. You want financial freedom, you got to get your royalties. That's right. Music royalties, ladies and gentlemen. And also, I can't remember the name of the companies though, but you can Google. Just Google music. I'm doing it right now. Music royalties for sale. It's one. Uh, there's like two. There's really like two. Royalty exchange is one. Songvest is another. So take your pick on who you like. All right, take your pick. There's another one, musicroyaltiesinc.com, which I've never seen that one, but Songfest and the other one are the ones that I've used. So just so you know, there's several things that you can do. Get yourself in. It's one of those things. Okay, so you get $5, $10, $20 a month, 5, 10. You just let it ride because you bought it for a little bit. You might have a 10-year, 15 years, or whatever the agreement is, and the next thing you know, it's being played in a movie. You never know, man. Things happen. But yeah, I like that. That's a fourth bucket. Royalties. Writing. When you write things, that's royalties, right? You're a writer, you get royalties. Uh, you have distribution. Also, there's several ways that you can always have money coming in tomorrow's money. It does me no good to make $10,000 in 2025. That what I can buy now in 2027, the 10,000 is not going to do me any good because I won't be able to buy $10,000 worth of the same thing I can buy today. So I'd rather earn 15,000 because that's what it would be later. So that would be in that day 2027 money. So I don't lose. I'm not going to take 10,000 now. I need 15. That's what it's going to be. Money goes higher due to diluting the money supply, increasing the money supply on a daily basis. By the way, that's what treasury bills are. Just so everybody understands, when you buy into the treasury, which is up 4.45% right now, if you just want to be in a safe haven, but you're going to lose out to inflation. But it's some people do that. But the thing is, let's see, did I get everything down? Okay, I missed your bucket. I got it now because that's the fourth bucket. He's got the fourth bucket. It's music royalties. It's book royalties. It's a bunch of things, the rights, copyrights, and things like this. The big boys buy this stuff, right? But it's not only for the big boys. It's just the big boys have money to buy massive catalogs or massive rights. Little guys can do it too. Royalty exchange, go check it out. You'll be shocked. You'll see some famous artists saying, hey, just give me $1,000. You can have my royalties, my mechanical rights or whatever, digital rights or whatever for 10 years or 5 years for eternity, whatever. But the point is you're taking a risk, but hey, they might be bringing in $50 a year or $50 a month or something. That's why they don't care. They're just going, well, since it's only like $50 or $25, somebody give me $1,000 because this really don't matter. In order for me to make $1,000, it's going to take 20 years, right? It's like 20 months, 2 years, 3 years. So might as well get it up front and you can have the rights. So that's how it works. That's how it works, ladies and gentlemen. That's another derivative that we can talk about. Anybody else got any buckets? Says that's the fourth bucket that a lot of people here that's watching this live stream, they're not even thinking about that. I'm glad you brought that up, Brian P., because that's something that we used to talk about last year, trying to get people to understand you have alternatives, you have opportunities all over the place. You just don't know it unless somebody says something like Brian P. did now. So thank you for that. Now I'm going to wrap this up because we're only in an hour. I don't want to be on too long tonight because I got to get some sleep. I got to get on the plane. So Jawway J, where are you staying at, man? Are you in Bavaro right now? Are you asleep? What's happening? You're not asleep. Where are you at? If you're in Los Corrales, I'll come see you, even in the rain, man. Have a drink, and I'm out. If you're over here in Los Corrales, let me know, man. Let me know. If not, then I'll have to see you on another. Well, am I coming over here again? I don't know. We'll see. I don't know if I'll be coming back again because, again, I still haven't made the video. I'll probably be making the video next week because I'm going to be over in Vegas. We'll be there for a while. And so I'll be making videos again. And that video is going to be one for the ages, only because people right now, you're going to have opportunities. But you first have to understand the pitfalls. And I'm going to explain it right now. If you want to get into real estate on anything, whether it's Mexico, it does not matter, whether it's Thailand, whether it's Costa Rica, just keep in mind when a consumer nation such as America and Canada, their people, there are a large percentage of the population that live in paycheck to paycheck. That means they have no investment dollars. So if you're swiping off 80% of the population, not just 40, but 80% cannot afford to go out of the country and buy something, that affects the rest of the world. That's where all majority of their customers are from. 50 to 60% of the customers are from these America, Canada, and EU. So if all of a sudden that dwindles by 20 or 30 or 40%, all of a sudden you have lost the buyers and now your market gets stagnant because product is going to come on the market and be built with 20 or 30% of the units not sold. They're going to be sitting and somebody's got to pay HOAs for empty building, right? For 20% of the building empty, who's going to pay their share of the HOA? So that means now it starts. HOA goes, oh man, we're going to have a shortfall because we only got 20% of this sold. So now we got to raise the HOA. It can't just be $2.50. Now it's got to be $3.50 to make sure it's covered per meter. And then all of a sudden they start going, okay, well, we're fixing this up. Everything's going well. But the insurance went up year over year, right? Now all of a sudden the insurance went up by $500 to $1,000. So now we got a ticky tack. Okay, we got to add $25 onto the HOA this year, ladies and gentlemen. Now you're at $375. Now all of a sudden people are putting their units up for sale. And on top of that, you still haven't sold the place out 100%. And you have a slowdown of buyers. So now people have to try to start reducing their prices. A buyer's market, which is what we're in the Dominican Republic right now. Literally, because there are so many units. I get a listing of all the real estate, not all, a lot, that is already finished that you can buy for less than pre-construction and was built 2 years ago, built last year. But like Yahweh J bought his place for 155, right? He's going to be able to, he could probably sell it right now for 250, right? But can he? We don't know. Somebody's going to have to come and want to buy it. But here's what the problem starts happening. Him and a few other people combined have 3-bedroom, 3-baths, all in the area that's for sale. And they're all competing for that few customer that's going to be there. A few customers are going to be in the house. So put in how much you think Yahweh J's villa is going to be worth. 3 bedrooms, 3-bath, a pool, all the AC units in there. I don't know the square footage. I'm assuming it's 12 or 1,300, 130 square meters, somewhere in there. Let me know. Put it down here in the chat. I'm putting mine in. I put 270 is what they're going to come back at. But obviously, they're going to be above 265. So it's probably going to be 295, 300. But I had to be fair because initially I said 260 without knowing that the additional price. So I think they're going to come back and say 290, something like that. Quite frankly, 285, 290, somewhere there. I don't think they're going to say 265. I think they're going to say 280, 290, which is great. He's doubled his money. So what I'm going to get at and end this with is once you have a slowdown in buying, then you have a slowdown in buying the existing homes. Now you have an influx of new properties that are pre-construction where 20 or 30% is not sold out. You have all these units, not enough buyers. All these units, not enough buyers, puts in a down market because people are now going to shift. They're going to go, okay, I tried to sell this for 250, But hell, I want to get rid of this. I'm going to drop my price to 220. Another person's going to go, well, damn, I better drop my price to 215 because nobody's buying mine at 230. You see? And so you get a buyer's market, and that's what's ending up happening. So if you weren't able to get in on the frenzy, I believe, even pre-construction, I think it's going to revert back to a 2022 type, 2023 pricing. I think that's what's going to happen because I do not believe that the tourist numbers are going to go to 9.5. I don't even know if they're going to get to 8.5 air passengers this year on the island to match last year. But if you can't if you can't do another million in tourists, that means you're going to have another 10,000 units in the Dominican Republic released that were pre-constructions on all the island. There's going to be over 10,000 units dropped. Out of the 10,000 units, there's probably going to be at least 20% of those to 30% of those are going to be short-term rentals or long-term rentals. Or a seasonal rentals, 3-4 months, January, December through April type of stuff, right? All of that is going to be on the market and available. So therefore prices are going to start decreasing. Even for the new stuff, you'll see it. Trust me, you're going to see it. Seen this too many times. So let me know. So I put mine in. Jawway J says, oh no, I put 270. Joe Nay, once again, very nice to see you this afternoon, man. Greatly appreciated and welcome to the SSN Nation Thursday night special edition. He brings his tagline. Good evening, everybody. Hope everybody's all well. Yes, everybody's all well. I just smashed that like button. Thank you so much for that, man. Greatly appreciated. And make sure you smash the like button. If you like what we're talking about, please subscribe to the channel. Click the all notification bell. That would be greatly appreciated there. All right. Let's see. Jawway J, thank you for that. Cruise down Jardines 3, ladies and gentlemen. The place looks definitely very nice. It's very cheap compared to prices elsewhere. But again, you're going to have to deal with if you want to live out there. There's special conditions. I'll make a video about that too, because again, you guys know my investment strategy is not Jardines. My investment strategy is upscale luxury. So where am I going? We're going with, Larimar. If they actually built something and I was there, okay, cool. Cruise on land, I like that. If it's Vistacana, I like that. Atlantida, if it's that, or River Island, I like that's good. Oceana, that's over here in Los Corrales, that's good. But the problem is their prices were higher. So Oceana, you had to buy a 2-bedroom for $250,000, $225,000, fully furnished. But now, are you going to be able to get $200 a night for a 2-bedroom around here? No matter what, if it's upscale kind of luxury, I find that very hard. I don't see many places that are not at the beach where people are able to get $200 per night here in Los Corrales. You guys can go to Airbnb and go look for yourself. You can put in 2 bedrooms to clear off everything to make sure it's 2 bedrooms, and you will see. Would you have spent 230,000, 240,000? You would have spent 175 when it first came out, but that was quickly erased. Then it 230, 240, 250. Are you going to be able to rent out here at 250? You can go to Airbnb. I'll wait. I already know you can't. It's not on the beach. You're not getting $250 a night. You're not getting $1,800 for a week, plus Airbnb fees, which is going to make it $2,000. I don't see how that's going to happen. For a 2-bedroom in a condo project, yes, it's going to be sweet with some water and things like that. And other nice stuff. Grocery store is supposed to be around here. I saw the space. I don't know how that's going to happen, but I don't know. They're going to have it there allegedly. A theater is supposed to be on this property allegedly. I don't see where that space is either, but maybe there is. There's supposed to be a place for restaurants and things on their property. So that must be a hell of a big property. I don't know. But the point is, can we get $250 a night? Can we get $225 per night? Because the rule is 0.1% is your goal. 0.1% is your goal for rental every night. And the reason I give you guys that is because if you rent at 40%, you will still make double digits, 10% or more, without a 25% manager. Okay? Management's going to cost you 25 to 30%. You can't have that. But if you do 40%, if you do 70%, you can have a manager and still make double digit. But if you're doing 40% occupancy rates, no. But you'll still get double digits return on your money, which is what you need. You need 10% or more. So that's why I give you the 0.1%, ladies and gentlemen. So that's a safeguard. Now, if you get more than 0.1%, oh my, that would be off the charts, right? You win. But it's getting harder and harder to do. Building supplies cost more money as each month goes by. All right, Joe Nay. I was just going to be here for an hour and 15 minutes. It is now. So I'm going to check out here. And again, thank you so much for taking us around today. Rodney Perez, I see you on Instagram. Thank you so much for joining us. But it's going to be a little bit too late because I'm about to leave. I got to get up early in the morning. I got to get to the airport. I got to say sayonara. It was nice to hang out briefly for a few days. It was a rush, but nonetheless, got to go over, make sure my aunt can improve. I hope for prayers and love for my aunt that we can make some miracles happen and get her to improve over the next 3 months, 2 months. So you guys already know where I'll be. I'll be in Vegas, all right, for a month or two. And because I'm going to be in Vegas, I kind of have an itch because I haven't played poker in damn near 10 years, at least. I have an itch to go down and see the guys. So far, I've avoided that itch to go down and at least say, hey, what's up? Whatever. And of course, they'll be like, man, where you been? I've been another lifetime has happened. So maybe I'll do some, I don't know if I can. Yeah. I think you can bring video stuff. Maybe I'll go to the poker tables and play a little poker and do some filming. All right. But just remember, gambling is not an option for financial freedom. All right, just so you know. So therefore, that's a money management program. That's how that works. Remember, gambling is money management. It is not gambling. You do not go just to say I'm going to Vegas and oh, it's great that I lose my money. That is great how people think, but that's not what you should be thinking about. You should be thinking about which table game, as an investor, gives me the best odds to win. So in poker, I play against other people. Now the house gets their freaking rake, which could be 2%, 3%, sometimes 5. I mean, it's ridiculous. They can get their rake every hand. But the slot machines and other games, obviously there's a win rate. That's how they keep building towers. That's how come they don't care about customer service and hospitality anymore, because people are losing at a high rate that they just said. I found out today that a casino is charging $100 a person for a buffet. It was already bad enough when we were there 3-4 months ago, and it was $60 a person for a buffet. Now I find out today there's a spot that's $100 per person in Las Vegas. Also, they started charging people to do valet parking, and it's not $5. They were like $25 valet parking. Can you? I'm like, what type of Vegas is this? This is like, man, this is an implosion waiting to happen. I cannot believe that people are actually going to Vegas to spend $60 on buffets, $50 on buffets. This is insanity right now. I'm like, what? Pay for parking at a casino that you're going to lose money at? And the rooms are raising up in price? Yeeks. Yeeks. Casino always wins. That's right. That's why they keep building and building and building. But they're going to have an implosion as well. Vegas has enjoyed, ever since 1956 or so, and up until the pandemic, they've always grown in tourists and in profits. Because of the pandemic, it stopped it. But now that's why on the other side, they said, okay, forget that. We're just going to charge crazy numbers for buffet to offset. We're going to charge for valet parking to offset. We're going to charge for parking under the casino as an offset. We're not going to be giving out as many free drinks anymore, as many comps anymore. This is going to be a business. Forget hospitality. And by doing that, sooner or later, you're not going to be able to create enough events. Like the F1 brings in people. The Sphere brings in thousands of people for the shows, right? And then the shows themselves, the residencies they have brings in thousands of people. But sooner or later, people are going to be like, because we're already there, like, man, I ain't spending $300-$400 for a ticket to go see whoever for one night. And then I got to eat around here, and they're talking to me like, oh, that'll be $40 a person just for a meal, $50. I mean, this is insanity right now. 80% of the population is living paycheck to paycheck. This is insanity. You're going to be dropped. And so they're going to have casinos going to start having less revenue. And then the implosions will begin, and then the layoffs will begin, and then the property values start coming down in Vegas. And that's when you have another buying spree in Vegas. Again, don't let Vegas slip by you. They always are able to reinvent themselves. That's the miracle that Vegas is. But I've been waiting for the day, quite frankly, that it turns into a third world country, and they just don't know it yet because it's not sustainable. You're raising prices, people are making less. So sooner or later, there meets a crossroad. But anyhow, that's probably in about 5 years or less. You'll be able to buy a cheap house in Vegas in less than 5 years. In fact, it's going to be less than 2 years. It's my opinion. 1 year, 7 months is what you have. They're on the same timeline. It's already started, but 1 year, 7 months, that's when you're going to think about Vegas again. All right. And then they'll be back to their reset. They'll be like, oh, yeah, we're back to hospitality, family, and come on down. Buffets are $15, $20. It's all good. All right, ladies and gentlemen, I'm out of here. And like I said, I love you guys very much. I appreciate your support over all these years, and especially now. I'm not monetized. We don't make no money doing any of the live streams, any of the videos. None of it's monetized. So now you know. We still doing the damn thing, regardless. I'm out here trying to help you. Other people are trying to give you information and help you. Safe flight. Thank you so much, EV Place. I appreciate that. And we'll be seeing you guys tomorrow. I know when I land in Vegas, all of a sudden my phone's going to light up. Ding, 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 ding. From all the winnings from the dividend investment tomorrow. That's right. And oh, by the way, EV Place, because of you, I got some TSOY. And so, what was TSLY? Oh man, I forgot. Let me see what it was, man. Yeah, they're kicking out that 76 cents. I was laughing. I'm sitting there like, wait a minute. Remember last night we were talking about it? It was 917. And then today it went to 890 something. And I was just laughing. I was like, are you kidding me right now? Then I came over here to get ready because I was like, oh, wait a minute, it's Thursday. They're going to show us what the dividend's going to be. Then when I saw it was 76 cents, I was like, oh, this is funny. Dollar cost average is under $9. And even at $9, you're getting some crazy number. Crazy number. Wasn't 8.4%, I think. And I'll just do it again. 76.76 divided by 9. That is, yeah, 8.4%, 8.444444. I started laughing. I was like, man, most people would take 8.4% for a year. Never mind 8.4% for 1 month. That's funny. And if they do another 76, then you'll be at 17%, which is crazy. That's insane in 2 months. And that'd give you 105,000 annually if they're able to continue along this price average. That would be insane. All right, ladies and gentlemen, we got to wrap this up. RL Lyles, I see you. Thank you so much for joining us on the Instagram network and Twitch. Twitchers, I see you out there. Thank you so much. And everybody else on Facebook, I appreciate it. Make sure you guys smash that like button. Subscribe, no matter where you're watching. Please, I greatly appreciate that. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. And that's why you have to get with the program. 1 year, 7 months is what you have. Get your credit in order up to 780. That's what you need, 780 and up. I have tools down below. Smart credit monitoring is down below. If you need help with debt resolution, and then on the next, in 1 year to 2 years out, your credit's back to good, then you need to see Tracy at, I want to say Resolve Finance. I can never remember this thing. There's too many things in my head. It's Tracy at Resolve Finance. Go see her. All right. Hit her up by email. Let her know you're from SSN Nation. Let her know Eric sent you. All right. She's familiar. So tracy at resolvefinance.com. And I don't know why my keyboard's not working. Oh, there it is. I just wanted to double check, make sure that's it. Because I have way too much information in my head. You ever hear the old guys go, I can't even remember everything I know. Right? Yeah, that's me. I can't remember everything, man. Too much stuff in my head. All right. Yes, Tracy at resolvefinance.com. So I guess I do know. All right. Go down there. Make sure you get your debt resolution. You're going to have a pain for 1 year and 8 months, which is no problem because on the backside, after this credit crunch happens, after they reduce the federal funds rate, everything comes flushing out. Then they want people to invest. And that's why you're going to need a 780 credit score. And you'll be able to buy up all the damage that is going to happen. All right. Just keep that in mind. That's where you're going to be in position once again. So if something happens to me on this plane trip or something happens to me down the line, you guys have this information out here. It's for the world to know. And you know what? It would be awfully nice if YouTube actually shared our videos with the world instead of just keeping it inside the United States. That'd be awfully nice. That'd be real nice. A few people out in the DR that watches, and a few people in Canada that watches, and then one or two people from uh, the African continent watches, and nobody from the EU, nobody from Asia, nobody from South America, nobody from Mexico, this is crazy. Two people from Canada. This is absurd. Out of the whole world, there's less than 10 people a month that watch SSN Nation. And we talk about stuff all over the planet that applies to everything, but they show no love. And now, as you guys know, we're not monetized either. So anyhow, I'll see you most likely on Monday at 8:50 p.m. Eastern Standard Time, live, 8:50 p.m. So again, stay safe out here because it's hard. And by being hard, it gets harder if you have to keep reaching to find more money. You don't want to keep reaching to find more money. You want to know more money is coming. So that's a comfort. You could say, oh man, I'm living paycheck to paycheck this month. But it's kind of like, well, hey, if you have another 500 to 1,000 coming, you can say, oh, okay, I made that investment. And now I have another 500, 1,000 to make so I can pay my energy bills. I can pay phone bills. I have nothing to worry about, right? So that's what position you need to put yourself in right now and stop out here playing 80% or living paycheck to paycheck during the month. Sooner or later, after this next price increases continue to go up, there's going to be 80 to 85% of the population during the month. And then it's going to turn into where 70% of the population is living paycheck every month, every year. And that's when things are going to hit the fan. And that should be coming up 1 year, 7 months from now. All right. Just so you guys know, I'm going to be out of here in a second, but make sure you hug your loved ones. Make sure you teach them some things because the kids growing up now who are 15, 18, 20, 5, 10 years old, they're not going to know nothing about investing because the rich will be controlling the world. Those that have the investments, the oligarchs will be here in America, and they're already here. So the upward mobility is going to be slim. So they're going to have to know how to start a business. They're going to have to know how to invest. They're going to have to know how to get a brokerage account. They're going to have to know all this stuff. They are not going to be able to just go to a job and think that they're going to work there for 30 years and get a pension. Pensions are going to implode sooner or later. Those won't exist. Social Security potentially could go bye-bye. So again, by the time these people who are 10 years old, 15 years old, 20 years old, the next 40 years, America's not going to be what it is right now. They don't have the money. We already don't have the money. We're $37 trillion in debt. We have a $1 trillion a year interest payment that we can't pay, which is another problem. We'll talk about that another day. But thank you so much for being here, ladies and gentlemen. And just again, make sure you stay safe. All right. And I'll see you on Monday night. And with all that said, keep your head up. Keep moving.